Gold. The very word conjures images of wealth, security, and stability. For centuries, this precious metal has captivated civilizations, serving as a cornerstone of monetary systems and a symbol of prosperity. But gold is much more than a relic of the past. In today's volatile world, it has re-emerged as a safe haven asset, a refuge for investors seeking shelter from economic storms. As we navigate uncertain times, understanding the forces driving gold's price is paramount. Whether you're a seasoned investor or just beginning to explore the financial landscape, the insights gleaned from analyzing gold's movements can be invaluable. Join us as we delve into the factors propelling gold's rise and explore what the future may hold for this enduring asset. The price of gold is often seen as a barometer of fear and uncertainty in the global economy. When traditional assets like stocks and bonds begin to falter, investors often turn to gold as a safe haven. This flight to safety can drive up demand for gold, pushing its price higher. Understanding the dynamics of gold's price movements can provide valuable insights into the health of the global economy and help investors make more informed decisions during times of market volatility. To grasp the significance of gold's recent surge, we must first journey back in time to understand its historical context. Gold has played a pivotal role in shaping economies and civilizations for millennia. From the ancient empires of Egypt and Rome to the modern era, gold has served as a universal currency, a store of value, and a symbol of power and prestige. Throughout history, gold prices have been intrinsically linked to major geopolitical and economic events. Wars, recessions, and periods of high inflation have all contributed to spikes in gold prices. For example, during the stagflation of the 1970s, gold prices soared to unprecedented heights as investors sought refuge from soaring inflation and a stagnant stock market. This period underscored gold's enduring appeal as a hedge against economic turmoil. By analyzing historical trends and understanding the cyclical nature of gold prices, we can gain valuable insights into the factors that may be driving the current bull market in gold. The recent surge in gold prices can be attributed to a confluence of factors, each playing a significant role in shaping market sentiment. One of the most prominent drivers is the current geopolitical landscape, marked by heightened tensions, trade wars, and political instability. Uncertainty breeds volatility, and in times of global unrest, investors often turn to gold as a safe haven asset, seeking to preserve their wealth amidst the storm. This surge in demand, coupled with concerns over the long-term impact of government policies, has contributed to gold's upward trajectory. Another key driver is the unprecedented levels of global debt. Governments and central banks around the world have injected trillions of dollars into the financial system in recent years, leading to concerns about inflation and currency devaluation. Gold, with its finite supply and intrinsic value, is often seen as a hedge against inflation and a store of value that transcends the fluctuations of fiat currencies. As investors seek to protect their purchasing power, gold's appeal as a safe haven asset is further amplified. Economic indicators. Gauging gold's trajectory. To gauge the future trajectory of gold prices, it's essential to consider key economic indicators and their potential impact on this precious metal. Interest rates, inflation, and economic growth all play a crucial role in shaping investor sentiment and driving demand for gold. When interest rates are low, as they have been in recent years, the opportunity cost of holding gold decreases, making it a more attractive investment. Conversely, rising interest rates can dampen demand for gold, as investors seek higher returns elsewhere. Inflation, often referred to as the silent thief, erodes the purchasing power of fiat currencies. Gold, with its intrinsic value and limited supply, has historically served as a hedge against inflation, preserving wealth during periods of rising prices. Economic growth is another crucial factor to consider. During periods of robust economic expansion, demand for gold may decline as investors shift their focus to riskier assets like stocks. Conversely, economic slowdowns or recessions can drive investors towards the safety of gold, boosting its price. Golden outlook, what the future holds. Predicting the future price of gold is a complex endeavor, influenced by a multitude of factors that can shift rapidly. However, by analyzing current market trends, economic indicators, and geopolitical developments, we can glean insights into potential scenarios that may unfold. Given the current global landscape, characterized by geopolitical uncertainty, rising debt levels, and concerns about inflation, the outlook for gold remains cautiously optimistic. The factors that have propelled gold's rise in recent years are likely to persist, suggesting that this precious metal may continue to serve as a safe haven for investors seeking to preserve their wealth. However, it's crucial to remember that gold prices are inherently volatile, subject to sharp fluctuations influenced by market sentiment and unforeseen events. Investors should approach the gold market with caution, conducting thorough research and considering their own risk tolerance before making any investment decisions. What are your thoughts on the future of gold? Do you believe it will continue to rise in value? Or are we nearing a turning point? Share your insights and join the conversation in the comments below. And don't forget to like and subscribe to Express Econ Geofinance Insights for more updates.